The world's largest retailer, Walmart, announced a warning about price hikes due to President Trump's tariffs. We'll unpack why global trade policies affect the cost of your everything, what these tariffs mean for the economy in general, and how they could hit your budget and your investment portfolio. Plus, we'll explore some actionable insights for consumers and investors. Let's do it. Welcome back. For those of you who don't know me, my name is Steven Spicer, and after more than 15 years of studying the markets, it's obvious that a company like Walmart does not raise prices lightly. It's their whole shtick. They squeeze their vendors as low as possible and then operate themselves on razor-thin margins. So when they announce upcoming price hikes, it's a big deal for the whole economy. Walmart's chief financial officer, John David Rainey, dropped the bombshell in a CNBC interview. He said shoppers could see price increases as early as late May, with more significant hikes in June due to tariffs imposed by the Trump administration. Walmart's CEO, Doug McMillon, echoed this, stating that even with recent tariff reductions, the company can't absorb all the costs because of tight retail margins. Items like bananas, avocados, roses, toys, and electronics were among those expected to get pricier. But what's driving these increases, and why is the world's largest retailer, known for its everyday low prices, sounding the alarm? Let's break it down. First, let's talk about what these tariffs are. Tariffs are taxes imposed on imported goods, and President Trump has made them a cornerstone of his economic policy. As we've explored in previous videos, in April 2025, the US slapped a 145% tariff on Chinese goods, though this was reduced to 30% for a 90-day period starting in May as part of a trade truce with China. Other countries like Canada, Mexico, Costa Rica, Peru, and Colombia face a 10% tariff, while specific products like steel, aluminum, cars, and auto parts are hit with 25% duties. These tariffs aim to protect US industries, encourage domestic manufacturing, and generate government revenue. But here's the catch. They also raise the cost of imported goods, and retailers like Walmart are feeling that. They're feeling the heat. Walmart imports about 1/3 of its products from countries like China, Mexico, Vietnam, India, and Canada. For example, 80% of toys sold in the US come from China, according to the Toy Association. Food items like bananas, avocados, and coffee often come from countries like Costa Rica and Peru, which are now subject to tariffs. When tariffs increase the cost of these goods, retailers face a tough choice: absorb the costs or pass them on to consumers, or a little both. President Trump took to Truth Social in May, urging Walmart to eat the tariffs and not raise prices, pointing out that the company made billions last year. But here's why that's easier said than done. As I mentioned, Walmart operates on razor-thin profit margins, typically 1% to 3% in retail. When tariffs add 10 to 30% to the cost of imported goods, absorbing those costs could wipe out profits entirely. For instance, Walmart's CFO estimated that a $350 car seat made in China could jump to $450, a 29% increase. That's not pocket change for a company processing millions of transactions daily. Walmart's trying to mitigate this. Even if they end up eating some of the costs, which they surely will, inevitably some will still pass on to us, to the consumers. They're working with suppliers to swap out tariffed components, like replacing aluminum with fiberglass, which isn't subject to tariffs. They're also committed to keeping food prices low to avoid further burdening consumers already stretched by inflation. But McMillon was clear, the magnitude of these tariffs is unprecedented, and passing at least some costs to consumers is inevitable. When we zoom out, you realize that Walmart isn't alone. Other retailers and brands like Mattel, Microsoft, and Ford have also warned of price hikes. Mattel's CEO said toy prices will rise, and Microsoft has already increased the recommended retail price for Xbox consoles and controllers. A Telsey Advisory Group analysis found that a Barbie doll at Target jumped 42.9% in price in just 1 week in April, from $10.49 to $14.99. Home Depot and Target, which met with Trump alongside Walmart in April, are bracing for similar challenges, with Target expecting flat sales due to tariff pressures. The National Retail Federation estimates that tariffs could cost American families thousands annually, with everyday items like sneakers, toasters, and mattresses seeing significant price spikes. This comes at a tough time. Consumer sentiment dropped to its lowest level since 2022 in March of 2025, according to the University of Michigan. And US GDP contracted in Q1 2025 for the first time in 3 years, raising recession fears. Economists warn that tariffs are a double-edged sword. While they aim to boost domestic manufacturing, they often lead to higher prices and inflation. Ryan Sweet from Oxford Economics told the New York Times that businesses cannot absorb all tariff costs. They'll either raise prices or cut jobs. The Committee for a Responsible Federal Budget estimates Trump's tariff and tax policies could add $3.3 trillion to the federal deficit over a decade, with $600 billion in 2027 alone. Meanwhile, Federal Reserve Chair Jerome Powell warned in May that tariffs could keep interest rates elevated, complicating efforts to tame inflation, which is projected to exceed 3% in 2025 if tariffs persist. But it's not all doom and gloom for Walmart. Their scale gives them an edge. About 60% of their products are groceries, mostly sourced domestically, so they're less exposed to tariffs than retailers like Target, which relies heavily on imported discretionary goods. Walmart's Walmart Plus membership program, accounting for nearly half of its e-commerce sales, is also driving loyalty and could help them gain market share as consumers hunt for value. In fact, Walmart stuck to its full-year sales forecast of 3 to 4% growth, signaling confidence in navigating this storm. But what does this all mean for you? How will this affect your bottom line? In short, as a consumer, expect to pay more for imported goods like groceries, bananas, avocados, coffee, and roses from countries like Costa Rica and Peru. Toys and electronics, items like Barbie dolls, Xbox consoles, and other China-made products. And general merchandise, clothing, footwear, and home goods, many of which come from tariffed countries. The Bureau of Labor Statistics noted a 2-cent per pound increase in banana prices from February to April this year, and more hikes are likely. If you're on a tight budget, these increases could sting, especially after years of inflation. Walmart seems to be, at least this is their narrative, that they're trying to control costs by reducing food waste and optimizing supply chains, but there is only so much that they'll be able to do. For investors, this is a critical moment. Walmart's stock dipped over 1% on the day Moody's downgraded the U.S. credit rating, citing tariff-related economic uncertainty. Yet, analysts like Barclays' Seth Sigman argue that Walmart is better positioned than competitors due to its scale and supplier relationships. Their e-commerce growth, 20% in the last quarter, and Walmart Plus program make them a resilient pick in a volatile market. However, keep an eye on competitors like Target, which may struggle more due to their reliance on imported discretionary goods. Broader market implications are also worth watching. A CNBC supply chain survey from April 2025 found that 63% of respondents expect a recession this year due to tariffs, with consumer pullback likely in Q2. If inflation spikes and growth slows, sectors like retail, manufacturing, and logistics could face headwinds. On the flip side, domestic producers could benefit if tariffs spur U.S. manufacturing, though experts say this won't happen overnight. Hopefully you have a professional helping you keep an eye on all this, or helping you implement strategies that insulate you from the massive downside risk you'll find in the market. This is what we do. If you're ever interested in learning more about what working with us could look like, you can learn more on our site at spicercapital.com. Regardless of what you do personally, Trump's tariffs are shaking up the retail world, and even giants like Walmart can't escape the impact. While they're fighting to keep prices low, consumers will likely feel the pinch on everything from bananas to Barbie dolls. For investors, Walmart's resilience makes it a stock to watch, but the broader economic risks, higher inflation, potential recession, can't be ignored. And being prepared for chaos like this is kind of the whole point of my book, Stop Investing Like They Tell You. That's the Chinese version, sorry, that's the wrong one. Of my book, Stop Investing Like They Tell You, and our financial doomsday survival guide, which I'll link out to in the description. At Spicer Capital, whether you're a client or not, our goal is to help you navigate these shifts with clear, actionable insights. That's what those resources are for. That's what this channel is for. So what do you think? Will these tariffs only hurt your wallet? Or could they spark a U.S. manufacturing boom, as Trump hopes? Drop your thoughts in the comments and let's keep this conversation going. And if you found this video helpful, give it a thumbs up, subscribe, and hit that notification bell. I wish you all the best. Take care.